Hello and welcome to August 25th. Alpha's KR at 277, but stochastic strategy fell down to a -8 and the SPY is at 21.7. So let's go look at that situation there. There's the SPY, and as I said before, we have to take it off here on January 4th, which is right. Oh, I just saw it. Just there it is. There's your 368 in the black tab against 44.91 today, which came out to 21.7. And we are at -8. And why is that? So let's go to the chart and let's work on that. Okay. Why is it? Because we still have these two anchors of YELP and AT&T holding us down. They are making a little bit of progress, but because this is a DTE trading strategy and this is for long term, it's the pain we go through. But I will say this is not going to happen. Well, this happened, but the idea is that we did not take any stops on these two, and that is what caused the anchor problem. Telray is a DTE, but it will take a stop, as you can see in the second video when we get to Telray. And for those who buy and follow the Telray, pretty much know the story there. All right, going on to our leader is still KR at 277. We had a green doji here, which is indication that possibility maybe we might have some support right in this zone here. Let's say the low here of 45.13 to a low or a high here of 46.32. So right there it would be our, we can declare that as the Doji Zone. We can declare the Doji Zone off this high. There's no real rule written in stone. Pretty much you just take the high of the Doji and the lowest strong candle to the left and declare it a Doji Zone. Done. That's it. It's more of an art than a science. But the bottom line is that it KR did hit this, did stop here. And we're still in good position with the stochastics and the RSI for uptrend. But that red line at 90 and here at 80 are our danger zones for the for possible price turnaround. And I say possible because I have seen where the stochastics has reached this zone and just stays there forever, and the price just goes up forever. Well, of course, not necessarily forever, but no, long term. All right, that said, let's go on. Let's go on to, excuse me. Let's go on to PG. Okay, over at Park the Gamble PG. Remember, our stop is still here at the first initial. I did not go to the third ratio because this is a DTE trade, and the DTE trade, you have to let it run. But I'm not going to be crazy enough to let it run without doing some kind of protection to get back something on this trade in case it does reverse against us. So we're looking for is the right there is a low point, and there's a swing low here. And a swing low here. You can see that the short-term price channel on the lower side is creeping ever so much and then got broken here. So this could be a very good zone right here. It could be a very good support zone right there, and see what price can turn around at that point and then continue up. And if not, if it comes down and takes us out at the first ratio, then this trade's done and it's out of the way and is an October expiration. And if it gets off the books, it gets off the books. But it should get off the books with a little bit of profit at least and get back our buying power. Our buying power got back to 841, and we'll be running the scanner at the end of this conclusion. So let's go on to XLC. And XLC is at, it got its, let's zoom in a little bit there. It did achieve its entry price exit right there. So it's been programmed. It's sitting there now. It's ready to break through that first ratio. So again, once we clear that first ratio, as you have seen in the past, once we clear that first ratio, we are going to go to first ratio, and then we're going to be sitting there until DTE. And this DTE till December is going to be painful. This is part of the problems of the day to expiration trading plans. It is extremely painful waiting and waiting for it to happen. But according to several my fellow classmates at OTA, In the long run, it has proven to be most profitable. So this is a slow moving train moving forward. The idea is to develop what I will be calling is an option ladder. Like I said, there's a thing called bond ladder. This bond ladder is a very it's a selling via investment vehicle by brokers for people who want much more returns on than the bank, but are not willing to take a tremendous amount of risk, and so they'll end up doing a called the bond ladder. They buy a bond however much money they have every month, every quarter, every year, and just let it sit there for 5 years. And then reload over 5 years until they're ready to say, okay, now it's time to take the money out for retirement. So usually bond ladders are started somewhere in the 45 to 50-year-old range, because that you still have 4 to 5-year cycles to get to age 60 or 65 for retirement. Of course, I am a strong believer and proponent of FIRE, financial independence, retire early. So if you're a 25 or a 30-year-old and you're looking at you're looking at trading, do it, build it, retire, enjoy your life at 40, and then go on to do what you want to do for your passion. Like one of my friend's passions, he's 45, and one of my friend's passions is that he wants to travel the world and take sunset and sunrise pictures from around the world. But there's no money in it, and it's an expensive hobby. So to support that hobby, he's developing an nest egg so that by the time he gets to age 50, he can call it quits and then go and pursue that hobby. All right, that said, let's go on. So XLC is already done, and briefly touch on XL on YELP. YELP is still doing a nice recovery. You can see we did get a little bit of lower low here, but you have a nice incline going up, and the 10 EMA is starting to now get in pace. When it gets in pace, this is a strong indication that the market's going to be in concurrence, and that will be really good, because then that sort of solidifies and fortifies the upward trend. Okay, that said, let's go on to our scanner and see what we got for the scanner for the alpha group. So we're going to go here and we're going to start off with all the scanners have been all corrected. The mistake that was happening was, let me go ahead and touch on that we were using stochastics full, and the scanner was geared to stochastics slow. And that's why some of the times the data didn't match up. I got to look at the chart and say, wait a minute, I got this, but it's showing me that, and then now the two are correlated. And then talking to a teacher, stochastics fast is the better one for our kind of 90-day trading. So that said, we're going to go ahead and load up the alphas and see if the alphas have anything happening. It'd be the uptrend. Reset the alpha conditions here. This is how you can, you build one scanner, and then you just go ahead and just change out the little conditions that you want, looking for a market, and go. So now we're going alpha. So RTX, Berkshire, and Munster. Now I'm going to say that this here is only going to be from one trade, so this is probably going to be RTX, but we'll go ahead and write that down. So RTX. We write all of them down because the reason is that you don't know if the options criteria is going to fit that particular day. I can tell you right now, Monster was a pain in the neck for a while. Why? Because the AB spread was so wide that I would be months before I had an opportunity would open up. Okay, that said, let's go on now to load up the downside and go ahead and put in the alphas. And we're almost out of time. So let me go ahead and do this real quick and see if we can find anything for the downside. And oopsie, that's not good. That's not going to work. And because you see, I have it set up for the all optionable for forward trading, because forward trading, it looks like it's becoming back on screen. All right, here goes the downside. Let's see if we get anything. And we do. We have Tau and we have PGR, which is the insurance company. Okay, with that said, we're going to conclude today's report for KR 277 so we can move on to Telray and catch you on the next video. Thank you very much for stopping by and checking it out.